This webinar is being sponsored and hosted by M Trading. So today we're going to talk about some popular chart indicators, in the market. Well, what is even a chart indicator? What is an indicator? Let's say you are driving and you've put a navigator to raise, let's say, the left side or the right side. You are trying to indicate to the traffic, or the people behind you, or the people around you, that you are moving to the left or you are moving to the right. So and indicators in forex trading also gives you a more clear understanding of where the market could go, not where the market is going, but where the market could go, because none of these indicators are 100% accurate, right? But if you are able to, understand your indicators right, you see that most of the time they are going to give you, let's say about 80% accuracy in your trading, so that you make much profit than how much you lose in the market. So let's go to TradingView. TradingView is a platform that I do most of my analysis over there. And after I'm done with my analysis, I move to MT4 or MT5 to place my trades. So this is the TradingView platform. So um, right here you go to FX. FX means effects or indicators or whatever it is. So you see, if you come here, there are a lot of indicators over here. There are a lot of indicators in trading, a lot of them. Okay, now today we're going to talk about just some popular ones. We're going to talk about some popular ones traders, or a lot of traders use in the market. That really helps in making a good decision in the market. So trading indicators, or what are some of the functions? What do they do? Well, it alerts you about a specific condition in the market. So let's say you are looking for a reversal. Let's say it's an uptrend and you're looking for the market to reverse towards the downward side. Now, a trading indicator can tell you that the price is overbought. Overbought means that a lot of people have, bought the currency pair or the assets. So, the price could reverse towards the downward side. Or let's say it could also tell you that right now it's oversold, so it could reverse towards the upward side. Or it's going to tell you that there's a trend formation. Okay, so it just alerts you about some specific conditions in the market that by just viewing the charts you can't see as a person. So these indicators are written with special algorithms. So they solve real, serious math problems um, with your GPU to, give you the right or the much accurate prediction of where the market could go. So that's what indicators do. It also predicts the direction of the price. Well, it's just related to the first one I just mentioned. And it also confirms your analysis. Well, you've done your analysis on weekend, and you think throughout the week, GBP USD is going to go towards the upward direction. Well, that's your analysis with no indicator. Now, you see that Monday, Tuesday, the indicator is also, confirming your analysis you did on the weekend. That means, you have the go ahead. Your analysis was right, and now you can, place trade towards whatever direction that's, you did your analysis to. So indicators are very, good tools to be used in the market. But guys, remember that as a good trader, the maximum indicator you should use on your chart should be three. You shouldn't use a lot of indicators. You see some traders using, 5 to 10 indicators on their charts. It's just confusing, because this indicator will indicate, a reversal. The other one will be indicating a continuation of the trend. They will be just telling you different kind of things. So you have the right, combination of indicators, and it should be a maximum of three as a good trader. You don't need a lot of indicators to, make profits in the market. It just depends on how you use the few indicators you have. That's the most important part of using indicators when trading. Well, what should you even have in mind when you are using these indicators? That's what I mentioned. Indicators aren't 100% accurate. They just guide you and give you a percentage of accuracy. Some gives you 70%, 60%, 80%, and it's much more based on how you utilize it and how you understand, the use of that indicator. So we have two categories of indicators. So the first one is a leading indicator, and the second one is a lagging indicator. So the leading indicator is like a prophet. So it shows you the future. It shows you the future. It's like it enters the future and tells you, this could happen within the course of the week, or this could happen tomorrow, or whatever it is. So it's just going to give you, a foresight of what's going to happen in the market next. And also the lagging indicator also goes with the price, right? It goes the same time with the price. So the lagging indicator also guides you as the price is going. The lagging indicator is going with the price to show you, the conditions. Is the price losing momentum, or is gaining momentum, or whatever it is. But going into the indicators we're going to talk about today, you appreciate, this leading and lagging indicators I'm talking about. Okay, so this is the first, type of indicator I'm going to talk about today. It's called the RSI. The RSI indicator, that's the relative strength index. So this is the RSI, and the RSI measures the strength or the weakness of a currency pair or an asset that you are using by comparing its movement, versus its down movement over a given period of time. So, without wasting much time, as I said earlier, I'd like to show you much of the practical aspects. Let's first look at this before we go into the chart. Well, this is, the RSI indicator. Down here, up here is just the price, but down here is the indicator. So the RSI indicator comes with two settings. Okay, it comes with two settings, and the default settings is, the settings you should be using in your with your RSI. So the upper band is 70. Okay, this is the upper band, and the lower band is 30. So that's like the default settings. Every trader or most traders use. Well, you can edit it or personalize it anyhow you want it, but this is the standard. Traders use. So let's go into the chat and search for RSI. There you go. So relative strength index. You just click on it. Okay, I think I have, let me delete this indicator. This is the alpha oscillator I use mostly. Let me delete this one and use the RSI. So this is the RSI you are seeing down here. Okay, and as I said, the top part, you see the top line here is the 70 upper band, and the down here is the 30 lower band. So it works with these settings mostly. And anytime you see that an RSI has crossed the 70 upper band, then it means it's showing an overbought condition. It means a lot of traders has bought, the currency pair, and it's telling you that since a lot of traders has bought, whatever goes up must come down. So it should be losing its strength or momentum whenever it gets to the 70 upper band. Well, sometimes it gets to the 70 upper band, and it should reverse or the downward direction. But here you see it didn't really, come down to the 30. It came down a little bit and pushed back up. That's why we say indicators aren't 100% accurate, because if it was to be accurate, and then here it was an overbought condition and it should come down all the way to this point, right? But since it's not 100% accurate, you should understand these markets. So traders, what should you expect? So anytime it hits the 70 upper band, then you should be expecting the price, or you should be expecting a reversal in the market. Right here, I mean, since it couldn't come down here, since it couldn't reverse here, you see it pushed it back up, and now it's trying to reverse. You see, so anytime you are looking for a reversal in the markets, then you should be using the RSI, because it really does a good work with, I mean, predicting reversal in the markets. So let's look for an oversold condition in the chart as well. Um, okay, so right here you see it came down to hit the 30 lower band, and it was showing an oversold condition. You see, the next day the candlestick that was formed was a really bullish candlestick. You see it right here, it was a really bullish candlestick. But I mean, it was a reversal though, but it couldn't hold and create an uptrend. It still continued its downtrend. And here it didn't show any oversold condition, but it reversed up here to form an uptrend. So I mean, you could go to trading view at any point in time if you have a spare time, and click on this RSI, and I mean, read the previous history of how it works. So you're going to see the pattern, how it works, and I think it could really help you in your analysis and your trading as well. It could really speed up your, I mean, your learning process in the trading market. So that is RSI. Guys, if there is any question, you can ask your question, and I'll be willing to answer it for you as well. Well, someone is going to ask, how do you even do the settings for the RSI to see the 70 upper band and the lower band? So you go to settings over here. So you see the upper band here is set to 70. Someone could change it to, let's say, 80 or even 90, but the standard one traders use is 70 and the lower band of 30. You can even change the color. You can customize it anyhow you want it. So that is it for the RSI indicator. That shows you whether the price is overbought or oversold, and you should be expecting a reversal or a continuation. Well, guys, the next indicator we're going to talk about today is the MACD indicator. So that's how, I mean, traders pronounce it, but some people also say MACD. Well, the MACD is, I mean, a term most traders like using when mentioning this, and the full meaning is the moving average convergence divergence. Moving average convergence divergence, and this indicator is a tool that's that is used to identify moving averages that are indicating a new trend in the markets, whether it's bullish or bearish. So as the first one, RSI, showed you whether a price is going to reverse or not, the MACD or the MACD also shows you whether there's going to after you've used the RSI to, I mean, see the reversal, the MACD can also help you to see or to know whether it's going to be a trend, or it was just, I mean, a false break, or it was just a small pullback. So the MACD helps you to identify new trends in the market. So let's look at how it works. So this is just a price, and this is the MACD indicator. So the MACD also works with two moving averages. If you've been trading for a while, you've probably heard of the word moving average before. Most traders use the moving average, but with MACD, it's, I mean, it's uses two moving averages, and we have the slow moving average and the fast moving average. So I'm going to explain that as well. So here you see. So when using moving averages, what should be the things you should look out for? Or what should be the key points, I mean, you should be looking for when using a MACD indicator? You should be looking for the crosses, wherever the fast moving average crosses the slow moving average. So you see this cross, and you see another cross over here as well. You see, so whenever the two moving averages cross, that is where you should, I mean, take a critical look at, because when it crosses, there is something going to happen in the markets, and we're going to look at that pretty soon. So let's go into the chart again and clear the RSI. Okay, so let's choose the MACD. There you go. Click it. Yes. Okay, so this is the MACD indicator you're seeing down here as well. You could also go into the settings and change the colors, but I'm going to maintain the colors it gave me. So guys, let's go into the settings again and let's see which one is the fast moving average and the slow moving average. Okay, so on default, the fast moving average is set to 12 and the slow is set to 26. Okay, so which one is the fast and which one is the slow one? Just a second. Okay, so the fast moving average is, let me try to, it's not written here, but let me try to, look at it and see which one is the fast and the slow real quick. Okay, so the blue one is a fast moving average and the orange one is the slow moving average. Okay, so I didn't see it in the settings, but just by the look at it, I was able to, know which one is the fast and the slow. And how are you also going to know which one is the fast, moving average and the slow? When the price is going towards the upward direction, right? When the price is going up, the fast moving average is much closer to the price than the slow moving average. Okay, when you see the fast moving average is always, closer to the price. So you see the blue one is much closer to the price, right? So that's the fast moving average, and the orange one is far away from the price. So that is the slow moving average. Okay, so let's go back and see here. All right, here you see when the price was coming down, when the price is coming down to the slow moving average is also closer to the price. When it's coming down, the slow moving averages will also be closer to the price. So, what should be the focus? What should we look at when we are trading with the MACD indicator? As I said, you should be looking for the crosses, wherever it's crosses. Here, it's crosses. Let me use this. Let me use this brush. Okay, right here. You see a cross here. You see another cross here, and there is two crosses here as well. Okay, so the crosses is telling you that there's going to be, or there could be, a new trend formation. Okay, so let's see. It's oh no, I have to clear this. Okay, let's see it from this standpoint. So you see that right here, I no, this one is not clear. Let me look at the one which will be more clearer to understand. Okay, you see right here, at this point, let me try to expand it. Um, okay, yes. So you see right here, the price was, coming towards the downward direction. Here, the price was, let me use this one to depart. Here, the price was, what is this? Here, the price was coming up to this point, and here it came down. You see, it came down. Here, it came up again, and it's continued here. Okay, so this is how the price was trading, or this was the movement of the price, right? So you see that right here, the fast moving average was closer to the price. that is telling you that it's an uptrend over here. Okay, and here you see that the slow moving average was also closer to the price when it was going down. Here you see it was a cross. So when it's crossed here, it's telling you that there's going to be another uptrend, I mean, formation. So you see that the price also continuously, I mean, went up. So whenever it crosses, it's showing you that a new trend is about to form. Here you see it's crossed here. And you see the price, I mean, or there was a downtrend here. There's a minor downtrend here. And you see here, I'm sure it's also crossed here again and it showed an upward movement. Guys, I hope you understand it. So whenever it crosses, that should be your focus because something is going to happen or a new trend formation could be forming whenever the two, I mean, moving averages cross. Here it's crossed and it was a downtrend. It crossed here, it was an uptrend. It crossed right here was an uptrend. So that is it for the MACD indicator. So the RSI, as I talked first about, is to show you, I mean, whether there's going to be a reversal, and the MACD also is going to tell you whether there's going to be a new trend formation or not. Guys, as I said earlier, if there's any question, you can ask it, and I'll be glad to answer you as well. Okay, so this is the parabolic SAR. So parabolic SAR is the first indicator I used when I started trading. I mean, probably 7 years ago, I was trading binary options instead. I started trading binary options before I switched into trading Forex. And there's a difference between binary options and Forex. Binary options are the ones you see, expect options, IQ options, and the other ones. I mean, which I didn't really believe or I didn't really trust the system. I mean, I was trading because I could really make a lot of profits, and in just a second, in just a day, the system could, I mean, make me losses. I mean, the whole day, and I'm going to lose all my profits. So I just switched to Forex because there is much transparency when trading Forex. So the first indicator I was using, even with the binary options, was the parabolic SAR because of its nature. And I could say it's one of the most simple indicators in trading. It's so simple to use and it's, I mean, fun to use as well. I mean, the SAR and the MACD comes nowhere near to parabolic when it comes to simplicity. So, what does the parabolic also do in the market? The parabolic also gives you, I mean, the view to know whether there's going to be a reversal or a trend is going to stop. So that's what a parabolic does for you in the market. So let's look at a picture of how the parabolic looks like. The parabolic is just dotted, right? It's just, I mean, some dots you see on your chart. But, well, let's go into the chart and see how it really works. But let me just give you an overview before the we go into the charts. Well, whenever you see, I mean, a parabolic dot on top of the price or on top of the candlesticks, then it means that it is pushing the price downwards. Okay, that means the price will be a downtrend or the price is going down. Okay, and immediately as you see that a parabolic has left the top of the candlestick to the down, that means it could be a reversal. A reversal could happen there. So let's go into the charts and you get to appreciate more of how the parabolic is being used. Okay, okay, so PARA. So we have parabolic SAR strategy and parabolic. Let's choose this parabolic. That's the main one. Right. So you can see the dotted lines over here. Well, let's say I can't see it clearly. Let me go into the settings. And I could even, I mean, one second. Let me go to I could even make it much bigger. Okay, I could make it much bigger. So let me choose this. So you see the dot has been much, bolder. Yeah, it has been bold. So this is how a parabolic looks like in the markets. So there's a parabolic. So let's go here. Okay, let me expand. Yeah, let me start from here. Okay, that's it. So you see that over here, the price, the parabolic was on top. So it was showing you that the price could be going towards the downward direction, right? But since the price didn't obey the parabolic and it broke through, you see now the parabolic came to form down here. Then it's showing you that, well, it could now be an uptrend. If the parabolic is down, then it means that it's pushing the price up. Okay? And if the parabolic is up, the price should be moving down, or it should be compressing the price downwards. So that's how the parabolic works. So you see right here, the parabolic was all the way down and it was holding the price towards the upward direction. And immediately it went here and there was a weakness of momentum. You see that the parabolic moved all the way to this point, now pushing the price down. And it wasn't really a downtrend, it was just, a little resistance is faced over here. And now the parabolic came to form another one down here. And showing you that, well, it could be another, reversal, or the uptrend could continue here. So you see, immediately the parabolic came down here, it's pushed the price all the way up here. And here, you see the parabolic has formed up here again, right? So within next week or within the week, this is USDJPY. You should be expecting the price should move downward or sideways since the parabolic is up over here. That means it could be pushing the USDJPY towards a downward direction. And guys, as I just said, indicators have a percentage of its accuracy rates. None of them is 100%. All right, so you should have that. That error margin in mind, so that at any point in time you are using parabolic or any indicator, you should know that worst things could happen, and you should have a backup plan for that as well. That's by setting your stop loss and your take profits as well in the market. Guys, that's it for parabolic as well. And after this webinar, you shouldn't just forget about these three key indicators we've talked about. What could really make you understand or really use these indicators best is by practicing. That's it. If you aren't even ready to use a live account, you can open a demo account and start placing trade using these indicators and back testing it to see how it works, so that if you are ready and you have your funds ready to place live trades, you already have an idea of how these indicators work and could work best for you. That's all for today, traders. If there is any question, you could ask a question at this point in time. Else, if you even want to ask your question off this webinar, you could send me a message on Telegram at Bank Lifestyle, or you could even go into my YouTube channel where I post, forex related content and crypto related content. And recently, I made, about 1,000% gains on, a crypto investment I made, and I'm still shooting a video about that. I invested $400 way back in November, just last November 2020, $400. And this month, what was last week, my $400 turned into $7,000. Okay, so that's a massive gain over 1,000%. Gains with my crypto. So you can also check my YouTube channel, that's Bank Lifestyle, and watch the videos. You can put down a comment and I reply to comments real quick as well. So anywhere you could reach me, I'm down to answer your questions and also respond to your concerns as well. Guys, if there is no question now, I would like to thank all of you for joining the webinar today. And okay, I see some hands raised. I see Dove and Prisla, your hands are raised. Can someone combine all the three indicators I talked about? Yes, you can combine these three indicators, but you should know that the RSI and the parabolic both shows a reversal of of a trend or of the price. So you can choose one of those because both do does the same thing. Okay, so you have to choose the one which works best for you and combine it with the MACD, right? The MACD does something different, and the parabolic and the RSI also does the same thing. So choose one between parabolic and RSI and combine MACD with it. Well, there are other indicators I couldn't talk about in this webinar, which other webinars I talk about. That's the moving averages, the Awesome oscillator, and the EMA and stuff. And that's I'm going to talk about those ones in the later webinars you're going to have. But guys, for now, you can combine these two indicators. You can even try all the three and see what works best for you. So I hope your question is answered. All right. If there is no question now, thank you guys for joining the webinar. Next week, same time, we're going to meet again with a new topic, right? So be sure to join next week's, since we're going to talk about something new that could really speed up your learning process in the Forex markets. Thanks so much for joining. And someone is asking again, what's my Telegram handle? My Telegram handle is Bank Lifestyle, BANK Lifestyle, right? And also, you can also subscribe to M Trading's YouTube channel, which every week they post a weekly global markets recap to show you what's happening in the market, and it's a great source of fundamental analysis as well. So, guys, we're gonna meet next week, same time. Stay safe and also trade safe. Bye.